Imagine earning a degree that prepares you with real skills for the real world. Capella University's programs teach skills relevant to your career so you can apply what you learn right away. Learn how Capella can make a difference in your life at capella.edu.
You're listening to a Mint podcast brought to you by HT Smartcast.
Hello listeners, welcome to the latest episode of Why Not Mint Money. I am your host, Judge Kriplani. Gold is often seen as a good hedge as it is inversely correlated to the stock markets. When stock markets go down, gold usually tends to do well. Hence, it can help you during volatile periods in stock markets. In today's episode of Why Not Mint Money, we are joined by Vikram Dhawan, who is a fund manager at Nippon India Mutual Fund, to tell us about his outlook for gold for the coming months and the coming years.
Welcome to Why Not Mint Money, a personal finance podcast where we help you understand basic money concepts and share strategies for you to build your wealth. So let's get started with your money journey.
Hi Vikram, welcome to the latest episode of Why Not Mint Money. It's really great to have you here. So Vikram, you have some interesting thoughts right now on gold prices and how you see gold prices going from here on. Can you share your outlook on gold? How are you positioned? How are you looking at it?
With regards to gold, returns historically, if you see in INR terms, the gold returns have somewhere between the fixed income or debt returns and the equity returns. So I think that has been a very long track record. There is no reason why it should not, happen in the future. But obviously, gold will go through bear markets, bull markets, consolidation, etc. So I think this is something that I believe will play out in the future also. It's very tough to give a price view because I'm assuming that your investors would be looking for a long-term investment. So I think they should understand and appreciate that besides being a hedge and an insurance, gold has given positive returns, decent positive returns over a longer period of time.
And Vikram, what according to you is going to be the key factors that will be influencing gold prices in the coming days?
So gold basically has got these four pillars of price movement. You have the physical demand, the jewelry consumption, as we call it, mostly jewelry and coins and bars, small bars. Then you have the investments, which could be through ETFs or some other mode. Then you have the central bank buying, and then obviously the event risk, which sort of gold more often than not tends to manage. So investors should perhaps take a note of this and see that if majority of these factors are positive, then more often than not, gold will tend to stay in a bull market. And if majority of the factors are against gold fundamentals, then you might see a consolidation or a bear market. As we stand now, the central bank buying has been unprecedented. We have seen past 2 years, central banks have bought almost 2 to 3x of what they usually buy. So that is something which is driving the prices. The physical demand has been fairly resilient despite the higher prices, which is driven by China, the Chinese consumption. Why China is important is because China and India put together account for roughly 40-45% of the global physical market. And with regards to event risks, obviously, I don't need to tell people, your viewers, your listeners, that the world is becoming a lot more uncertain than it was maybe 5-10 years back. So I think as of now, maybe 3 out of 4 factors are favorable for gold. So that's where we are right now.
Vikram, what about US Fed? There was a talk that there could be cut in interest rates. Now that seems a little far off. But how do you see that having an impact on gold prices in the coming days or months?
So over the longer period of time, gold prices are affected by the macros, which is the US dollar, the yields, the risk on environment, inflation, etc. But I think since what we have to appreciate is that since gold has been around for thousands of years, so the cycles of golds tend to be of multi-year. So you may have a situation in which even though the yields are higher, the dollar is higher, you still may have a gold bull run coming, but eventually it all will sort of, reach a point where either it will be a catch-up or a mean reversion. So as of now, since the driving factors are physical demand and central bank buying, the macros are not that important as at this point of time, because whether it is physical demand or whether it is the central banks, the investors or the central banks are using gold to diversify the risks. So it is more of a risk management, hedging or diversification play which is happening, and not so much, dependent upon what the macros are saying.
Okay, I take your point, but there are a couple of more big events coming up. One is, of course, India elections, and also, possibility of Mr. Trump coming in for another term in the US elections. So could those be points that one should factor in when looking at gold movement?
With regards to Indian elections, obviously, if the result is not what the market is expecting, then you might see volatility in the rupee, which we have to appreciate that what we get in India is gold price and gold returns in rupee terms. So historically, rupee has depreciated somewhere between 3 to 4%. So that adds to a tailwind. But I think the most important event historically is the US elections, because if you see the data of past 20-25 years, more often than not, especially the past 4 elections, gold prices tend to do well in the run-up to the US elections. So, and I think in this elections, the stakes are a lot higher than what we have seen in the past. With regards to the Republicans and Trump's coming in, I think that may lead to, that is the perception right now, what eventually we don't know what may happen. I mean, as they say, in a lighter way, that the world doesn't fear what Mr. Trump will eventually do, but what he can do. That is what everybody fears. So we don't know what eventually will happen on the ground as far as his policies are concerned. But I think there is an anxiety about that leading to some sort of a re-globalization or a deglobalization, protectionism, which usually is not good for the trade and for the currency market. So I think there is a fear that there may be some currency volatility if what he says he eventually ends up doing.
And Vikram, for investors, how much allocation should an investor have of their portfolio towards gold? Gold, we know, tends to do well when markets are volatile, when there is a sort of a risk of trade. Can you share how investors should approach it? How it, compared to other asset classes, how it fares in terms of risk parameters like credit risk, liquidity, and anything else that you would like to share for our investors who are listening right now?
So I think since gold is also a hedge, even though it has given positive returns historically, especially in INR terms, but gold is also a very good hedge, one of the better hedges and diversifier. One thing the investors have to be very, very cautious about is that process of diversification and hedging should continue, irrespective of where the risk assets, whether it is a bull run in equities or a bear run in the equities. Because if you take the example of the Chinese investors, I mean, they have been loading up gold in the past 1.5 years at the historic high prices. So I think that is diversification and hedging should be a hygiene factor for most, investors, as they say, that don't put all your eggs in one basket, because it's very difficult to predict the cycles. With regards to the minimum allocation to gold, it has to be commensurate to the value or amount of your portfolio that you want to be liquid at all times. That can be either in fixed deposits or fixed income or gold. So you have to come out with that figure, whether it is 3%, 5%, 10%, whatever that percentage will vary from investor to investor. So I think whatever minimum you want to keep liquid at all times, and not so much, exposed to the market cycles and economic cycles, that becomes your minimum allocation to the gold. With regards to the maximum allocation, I think if you go by the portfolio theory, the classical portfolio theory, any asset or any security which is added beyond 15% tends to be suboptimal. So I think you get the higher limit is around 15% and lower limit is where you would like to have, sort of a hedge or a liquid sort of space in your portfolio. So I think that is a range which depends, will vary from individual investors to investors.
Right. And Vikram, now we have so many options which investors can use to take exposure to gold, whether it's gold ETFs, gold index funds, sovereign gold, obviously physical gold is always there. What's the best way investors can take exposure to gold right now?
When you talk about investment, the most optimal product for whether it is investment for absolute returns or whether it is investment for hedging or diversification, gold ETF stands out all over the world. I mean, gold ETF has been one of the best inventions of the financial sector in this century because, you get the safety, security, liquidity, and more often than not, the liquidity of the gold ETF is far superior to the liquidity of the physical market. And I think what you have to remember is that you may want to keep gold in that form which performs when you need it. For instance, if we have volatility in the risk assets and you have gold ETF, then more often than not, and if gold does well, then you will be able to get in and get out of gold ETFs very, very conveniently. But if you have it in form of jewelry or physical gold, it may not, there may be a notional rise to the value, but you may not be able to realize that value or use it to hedge the portfolio. So I think as far as investors are concerned, gold ETF stands out, but obviously there will always be good demand for jewelry, for physical gold and all the other forms of gold.
Thank you so much, Vikram, for joining us today and sharing all those insights. Thank you, listeners, for joining us today. If you liked this episode and would like to hear 2 more such interesting conversations, do log into our channel, Why Not Mint Money, on Spotify, as well as other platforms, where you will find me omnipresent. Also, if you have any new ideas or suggestions, you can DM me on Twitter. My Twitter handle is @Jash Kriplani, that is JASHKRIPLANI, or y'all can always mail to us at mintmoney@livemint.com.
To stay updated on this podcast, follow us at HT Smartcast on all the major social media platforms. To listen to more such podcasts, log on to www.htsmartcast.com.
Imagine earning a degree that prepares you with real skills for the real world. Capella University's programs teach skills relevant to your career so you can apply what you learn right away. Learn how Capella can make a difference in your life at capella.edu.